I don't think we're at the end of the crisis. I think the euro may ultimately survive, but it'll limp along for some time. I think it's probably best for the global economy that it not break apart, but it's probably even better news for precious metal investors, specifically gold, silver. I think there's an increasing and profound lack of confidence in fiat paper currencies, not just the euro, but I think the dollar. I think central banks are pulling out all the stops to boost growth, boost exports by debasing their currencies, and you can see that again. I think gold is kind of a look. It's gone from 300 to about 1,800 over the last decade. It's gone up 11 consecutive years, and investors are increasingly skeptical of money printing. I mean, it might be a necessary evil, but I do think that there is a real danger for these currencies. Our national debt is now it's surged under Bush. It went up from roughly 10 to 15 trillion under Obama. The Federal Reserve's balance sheet has ballooned. It's now at about 3 trillion, which is roughly 20% of our national debt. And these trends don't look like they're going to change anytime soon. So I think for your average person, it would be not risky to have up to 10% of their assets in gold, be it ETFs, physical, or however it's gold mining shares, however it's manifested. We have been for a few years, and we will likely continue to be for a few years, in an environment of very low interest rates. And investors, therefore, are starved for income. When you have rates near zero, a 3% yield looks pretty good. If you have rates at 2%, that same 3% yield is not so good. And also older investors who are getting paid very little, if anything, for their savings, they're being pushed by Bernanke into riskier assets.